Hello and welcome to the webcast. We'll start in about 2 minutes, give some people additional time to log in. Thanks for joining us. Hello again and welcome to our banking webinar presented by BPM Online. My name is Mike Rooney. I'm the SVP and General Manager here at BPM Online. Today we're going to focus on winning the battle for customers in the age of new banking with smart tech tools and refined processes. To be honest, we're not going to focus on some futuristic technologies that don't exist or are out of our grasp, but rather on the tools that are available today and how you can leverage them to increase your effectiveness. We would like to make this as interactive as possible, so if you could, feel free to add questions. There's a chat capability or a question for the audience. Please feel free, and we'll answer those as we move along. First of all, a little bit about BPM Online in case you're not familiar with us. We've been in the process-driven CRM business globally for almost 15 years. We have 6,500 plus global clients, 600 plus employees, more than half of which are in R&D, and over 400 global partners. We use our partner network to extend our geographic reach, increase our implementation bandwidth, and of course to leverage industry expertise, much like in financial services. We do have offices in Boston, London, Singapore, Canberra, and Kiev. We've been recognized by many of the key industry analysts, certainly Gartner, Forrester, Nucleus, and Ovum, many of them for multiple years in a row, and you will see us appearing in multiple Gartner matrices and quadrants, as well as Forrester waves moving forward. We continue to acquire year over year industry awards. I think maybe the most prevalent most recently is the 2016 Market Leader Awards, where we were actually named among the 5 top CRM systems on the planet. Super proud of that, and certainly very happy that we continue to get accolades from the industry. So we do service probably 20 to 25 different industries across the globe, across our 6,500 customers. But financial services is probably far and away the largest of those. Here's just a snapshot of some of our customers. I'm sure they're names that you recognize. Some of them are very large institutions and have very widely implemented applications of BPM Online. So we're here today to really talk about how well financial services or the financial industry is embracing innovations. And while we all probably understand that financial services is probably one of the biggest consumers of technology, they actually aren't always the fastest adopters, the earliest adopters. It takes a lot of time to move such a big market. And actually, reflected in this, we compiled a lot of, throughout this presentation, you'll see a bunch of statistics and opinions, and we've compiled them from many different sources. This happens to be from PwC. We've also tapped into Forrester and others. But I think this is very interesting, very telling. 97% of the, I believe, 1,000 CEOs at financial services organizations that they polled see innovation as a key priority for growth. At the same time, the same ones, only 10% of CEOs saw their organizations as innovation leaders. So I think that's very telling about the adoption rate of technology within financial services. Likewise, from that same report, looking at where the focus areas of innovation were for these particular institutions, more than 50% claimed these four areas were really the focus of innovation. And the first two really focus on the customer experience and the need to enhance and enrich that customer experience and relationship. The other two then focusing on new innovative products, so innovation within the products themselves and delivering them over the new platforms. And then finally, core platforms. So as we change the channels that we approach, the instruments that we deliver, and technologies, the core platforms are going to need to change. Certainly, historically, core platforms have been both the major foundation of the financial services industry, as well as the anchor, making it really hard to move because they're so cumbersome. So we are seeing people invest in innovation in core platforms as well. So we look at where the need for innovation comes from, or how did we get here? And we look at the banking industry of the past, or banking technology of the past. Banking had always been fairly product-centric. So you had your, retail accounts and et cetera, mortgage lending, car lending, investments, and each of these had their own systems and solutions that somewhat siloed not only the data but the access. And so the legacy of that is a collection of applications that don't speak well together and really leave no single place to gain all the information regarding a particular customer or prospect. So let's step back a little bit and think about our personal or the general customers' expectations out there in the world. Things have changed quite a bit, mostly driven by the digital transformation, if you will, the increase in online digital channels and people's expectations. So these kind of four categories or segments are really driving customer expectations. The first is immediacy. We've all become very impatient. To sit on the phone and wait for even 2 or 3 minutes to get an agent on the line just isn't acceptable anymore, when we can go online and generally in a couple clicks, though we're certainly moving towards one click, we can get what we want. The second is transparency. For instance, this example, Uber. When I pull up my Uber app, I just punch in the destination I want. I'm going to see multiple options for pricing. I see where that individual is at the time and the estimated time to pick me up. It's all very clear to me, and as well as the cost of that ride. Financial services could certainly learn from that and get closer to that, and certainly there are some examples of that. With respect to personalization, I think we've all become very spoiled. As technology has been able to better leverage big data and persona behavior, et cetera, we get served up very specialized, personalized information. Again, the example here, Netflix. Once you use Netflix a few times, it amazingly has the intelligence to offer you things that you like or close to things you like. And that's all based on your previous behavior. And then finally, the fourth one, omni-channel or unified omni-channel. The idea that as a customer, I don't really care. I don't really predetermine what channel I'm going to contact a vendor in. So whether that's financial services or shopping or anything, I may pick up my mobile phone. I mean, actually, banking is a good one in that when I'm interfacing with my bank, I certainly do a lot of things online as far as paying bills and keeping track of my accounts, but I also use my mobile phone as well as I do stop into the branch and I use the ATM. So multiple channels, but the idea is at any one of those points, I assume that the other channels have communicated back and forth and the experience is consistent. So let's talk about the early adopters, I guess, of the digital technologies. And those, I guess, would be sometimes referred to as neobanks or the digital bank. And this is the old, no brick and mortar. Everything's going to be online and electronic. And so the financial model was by getting rid of, the branch-based distribution model, you get rid of actual physical assets and cost and frankly, people, and, should be able to offer services, similar services, at a lower price. It also offers up a different experience. So they tend to be mobile-centric, meaning, pretty much every capability, every offering comes through a mobile phone as well as online, as well as probably on the phone, phone line. They truly embrace mobile networks. So what I mean by that is they may have started by just having a Facebook page, but at this point, they really have created their own collaborative environments. Some examples of that, Germany's Fidor Bank actually created a site, a social site called Bank with Friends. And over time, and not too much time I should say, they've built up an online community of over 300 users. The benefits of that to the users is they actually can connect peer-to-peer for financial advice. So they're not actually going to the bank and asking what's the best loan or what's the best payment process or anything like that. They can actually ask others within that network. Frankly, this is a bit of self-service and takes the burden off the bank itself. So it kind of cuts both ways. Likewise, both Hello Bank in France and one of my favorite, Smarty Pig in U.S., I assume that's referring to a piggy bank, have built out applications that allow you to seek contributions from friends and family or people you know for particular savings projects. So kind of a internal or network GoFundMe. Very interesting. Movin Bank has made it easier to pay your friends or people you know directly through Facebook. So truly embracing the social network is the point, not just giving it lip service, if you will, or not just accepting a tweet as an input. And then the third one is they've tried to expand because they don't offer that face-to-face branch network, come in and consult with us, try to offer more and more money management and financial decision-making tools directly on their platform. So we see that a couple examples actually. Again, Movin actually allows on your mobile device to visualize your budget, so to categorize your expenditures and your income and figure out month to month, week to week, what your budget actually looks like in a graphical design. GoBank's Fortune Teller also offers up money management advice based on your product behavior, your historic behavior. The truth is, however, digital-only banks have had a hard time gaining traction. Most of them are very small and have not that large a client base. There are a few exceptions. Jibun Bank has actually gained 2 million customers, whereas Hello Bank has 2.4 million. On the other hand, number 26, who actually has only been in business 18 months, has 160K, so they're growing very quickly. The reality is, however, maybe it has to do with the economic times, the ups and downs. the mass population still clings to the security, I guess, of the big bank, of the traditional banking environment. And so digital-only banks have had a bit of a struggle getting off the ground. So why would people go to digital banks? And you know, what is the draw as it seems to slowly be picking up pace? I mean, the reality is they're looking for an enhanced experience, right? A digital experience that really maps to, you know, what we see in other industries, you know, Amazon or, you know, Uber or you know, even iTunes, right? We expect immediacy, transparency, all those things that we talked about previously. And the other reality is there are certain things that are driving people away from traditional banking. Really four main things that we've identified or have been identified in the studies we looked at. The first is the impression that banking is not simple, and people don't actually enjoy spending time, you know, at a branch or on the phone, or rather waiting on the phone, to manage their assets, their finances. They want things to be quick, easy, and if at all possible, fun. Certainly watching your balance grow is always fun. Some other things are not so fun, like paying bills. The second thing that we've found is most banks' access is channel restricted, meaning as they roll out web-based, PC banking and mobile banking, there are certain gaps. So let's say in some banks you can initiate an account opening on the mobile, but it actually requires still some paper forms to be filled out and maybe even come into the branch to sign those. Hopefully you'd print them, fill them out, scan them, and send them back. But there's definitely some gaps in that processing. The other thing with mobile banking that was highlighted even for the somewhat early adopters is they haven't done a great job of cross-selling and upselling and increasing their customer footprint within that mobile platform. We're going to talk about some people who have done a good job about that. The third piece is that banking is not seen as, or traditional banking is not seen as empowering. I don't feel like I can control my destiny, as I do maybe with E-Trade or, the online trading systems. And so in response to this, the digital banks have been trying to deliver content capability and tools through their platform to allow better financial management, even though there's not a traditional banking system behind it. For instance, Number 26 is that fairly new digital bank that's opened up. They've introduced hashtags where within a person's portfolio or within their transactions, they can actually tag those transactions and categorize them and build out their view, their desired view of their budget or income statement or balance sheet, so to speak, if they want. And then the fourth is that banking is not always transparent. Certainly, traditional banking, you'll be going along, making your payments, whatever it might be. Maybe a deposit didn't clear at the right time and you get hit with some fee, and you actually have to research what that fee is, and maybe it was an overdraft or a bounced check fee. The transparency really isn't there. Digital banks have gone a long way to take away all of those hidden fees, if you will. So, for instance, GoBank is committed to transparent fee structure and charges. And so the bank has no overdraft fees, no penalty fees, no minimum balance, etc. So let's talk about, however, the traditional banks that are making headway in this space and have done a good job. First of all, Bank of America has opened up an app specifically, so if you do need to schedule a meeting, a conference, a consultation, rather than going to the branch and waiting your turn, you can go online to a mobile app, and choose your topic, your day, and your time. You lock in that time, and then whether it's a call, and maybe it's a call back, they actually call you, or a visit to the branch, that time's locked in and you're not going to be wasting time sitting around. CaixaBank actually has implemented over 70 apps as part of their mobile platform. So they have a marketplace where you can download on your mobile all these different apps to do different things. One of the questions that gets asked all the time is, okay, great, is this all just innovation for innovation's sake, and is it actually costing us money? Well, in Kaja's experience, they actually increased the percent of new business sold, products sold, from 16%, that comes in through digital channels, from 16% of the overall business to over 21% in a very short period of time. So there is benefit to these different channels as they get adopted, and I think we're certainly going to see that increasing. Some other examples of best practice, Millennium Bank has actually offered a smartwatch application that allows you or helps you to find the nearest ATM. Very cool, comes up with a map of where that location is and how long it should take you to get there. OCB Bank, which is in Singapore, again, offering more of those financial management services, allows you to do that on your mobile platform. Some digital money management tools. And then Santander, I think this is a very cool application, allows users, customers, to split bills amongst individuals. So if you're out to dinner with 4 or 5 people, you know how we all try and do the math and figure out the tip and all that. They have an app that automatically allows it to divvy it up and take it off the appropriate credit card, take the appropriate amount off the credit cards. So maybe we'll just take a quick break here. I know some people have been entering questions. I appreciate that. Please do interact if you can. Here's a question. Can the traditional banks that embrace innovation basically be called banks of the future? Certainly they can. I would turn it around and say traditional banks that don't embrace innovations are not going to be there in the future. It may take quite some time for that to weed its way out, but to play defense and try and stall the implementation of these new technologies is probably not the best long-term strategy. So yes, traditional banks that bring in these multi-channel, or I should say omni-channel solutions are probably going to be the banks of the future. As I went through all this research and tried to pull it all together, and frankly, the story about how pure digital banks have had, troubles gaining traction, and then another study showed that actually maybe half of those digital-only banks are owned by traditional banks. You start to see the picture that the traditional banks are kind of test driving and trying to figure out the best model, and then you're going to see those all come together into more of a hybrid platform institution. And my humble opinion that's probably the bank of the future. So another question, you mentioned different channels, omni-channel. What channels are integrated in your system? So our system is, we'd like to say, truly omni-channel. So whether it's social, text, mobile, web, the phone, or even integrated with the point of sale, the branch level information that gets put in there, all of those channels can be used for input, but likewise be responded to. So I guess for now we'll move along, and depending on time, I'm happy to answer more questions as we get to the end. I'm sorry. So looking at the optimal customer journey, right? So if we take for granted that people generally are going to use multiple channels, however, most individuals have a preferred channel. So I would say most of my banking I do through online banking. Some people are mobile first, and some people just tend to use the ATM. Bottom line is the bank or financial institution should understand what that individual's preferred communication channel is and preferred time. So if you look at that customer's behavior, you're gonna very easily or quickly see, or the system can easily see, all of the interactions tend to take place between 7 and 9 at night, and they're almost all in email form. So for that customer, if I'm trying to promote to them or communicate with them, would be best done on that channel at that time. All the interaction should be easy and convenient, and I should say intuitive. So if I'm searching the web for a new type of an account, and I come to that page and it's not obvious to me what the parameters are of that particular instrument, could be difficult. Could be a very quick move to another institution's page. Want to see minimum time spent in the branch. You know, I know there's a U.S. bank that is advertising heavily that they've turned their, basically bank into a cafe to make it more comfortable, and that's great. However, my first impression is, well, doesn't that just mean I'm spending more time waiting to get the service that I'm looking for? So maybe free Wi-Fi and coffee will get me there, but the reality is we need to deliver services as quickly as possible as well. The other thing is when the system is truly omni-channel, there shouldn't be. So if I do something online and walk into the branch, my expectations are the branch knows exactly what I did. It knows what questions I answered and what my answers were. They don't walk me through a whole other set of questions and answers, right? So that shared data is evident as well, in real time as well. So let's take a quick look at an omni-channel customer journey. And I should say no two customer journeys may look alike as far as how they go across the different channels. So let's say, for instance, this is a person that's looking to open a new savings and checking account. I think what most of us do, if not all of us these days, is we go to search online, on the web, and Google's done a very good job of being the predominant thing. So in most cases, I'd say I Google it. And I'm going to look at the search results. So again, the bank needs to pay attention to SEO and how well they come up in Google results and other search engines as well. So that's one key component. And then based on the results that come through, I'm going to stop and I'm going to do some comparison. So back to my comments about the importance of the landing page being intuitive and easy to navigate, because what we've found and what the reports show is more and more digital customers' patience level are very, very slim, and they'll make a move very quickly and discard something that didn't seem intuitive. So from that, they may narrow your search to the different institutions or decide, hey, I think this particular bank is the one I want to go to, and they'll look to initiate an inquiry. And so in this particular customer journey, that's to call into a contact center to set up a meeting. So again, on the web, you want to make that as easy as possible. You certainly want the phone number there, but even better yet, maybe a click to call, so they can actually click a button and call. The other thing we see often is, the floating chat request that pops up and says, "Can I help you?" I think a lot of us find those a nuisance, but believe me, a certain percentage of people do click on that, and it drags them into the selling process, which is what we're looking for. So let's say through the inquiry we get in touch with the contact center. Again, the contact center should already have some information on this person. Our system in particular allows you to track the web visits, and so you can see where this person looked and what pages they looked at. So that information should already be available to the contact representative. So let's say they organize or coordinate or schedule a meeting in the branch. We're actually going to have a live face-to-face meeting. We can also leverage mobile by sending an SMS, a text reminder as that meeting gets closer, so they don't just disregard it. So then this person looking for a new account, looking to open up and put some savings into the bank, comes into the branch. When they come into the branch, again, all the knowledge that's been gained from that previous customer journey, their visit through the website, their conversation on the contact center, all of that should be immediately front and center when they walk in for the visit. The representative should already know this is the type of instrument they're looking with, and from that should be able to provide them with product packaging that's most appropriate. Help them select the most appropriate financial instrument for them. So let's say whether or not they actually close the deal there and open an account, when they leave the bank now, we should be able to keep track of them through mobile. If that's their preferred channel, let's say they don't open the account, we can then give them a certain period of time, all based on an automated process, and give them a reminder. Are you still interested in this? Do you have questions remaining? And again, once that deal is closed, we should, one thing the banks have not been all that good at picking up is cross-selling and upselling in the future. So based on this person's persona, age, preferences, products, etc., we should be able to offer them additional products. Sorry, I didn't continue to click through my customer journey. And there we go. Just going back here for a second, actually from one of the reports we used, a Forrester report, they broke down the percentages of age groups that use certain channels. And so you do see that online banking is becoming a very strong component, exceeding actually in certain age groups the ATM use. The branch use actually is still 61-something% with the, I'd say, older generation. And then the youngest are, this was surprising to me actually, the youngest are predominantly using ATMs. I would have expected them to be using mobile more often, but the 35 to 39-year-olds are really the ones leveraging more often the digital experience or digital channels. So this brings us to the cost between these different channels. The reality is, and really what was the driver for the digital-only banks, the digital banks, the cost of the branch network is huge. Basically, the difference between a digital visit versus a branch visit is 100 times. It's 100 times more expensive to have to accommodate a branch visit than it is for somebody to make a digital visit or transaction. And the ATM actually comes in fairly low as well, but still 10 times higher than digital. And the reason being, if you look at the right-hand side, 40 to 60% of the cost of the average bank, the operating cost, goes to the branch network. So huge component of the cost structure, and therefore leading to that digital bank concept. So let's step back to, again, I was talking about how traditionally bank technology got built in silos, and in this case we're talking channel islands, meaning that as the banks built out these new channels, I'm putting quotes around that, but the internet and mobile, they devised kind of a single-threaded channel communication. So while that may be multi-channel, it's not truly omni-channel. Meaning if I'm on mobile, I'm communicating with the mobile app, and to get information across from the core banking system, in this example, it actually has to go talk to the internet bank app and then across. So not immediate service capability with all information. The newer platform of omni-channel communications connects all those different channels to a single platform, a single layer of omni-channel banking, which gives access to all the information for that particular customer. So if that customer has a checking account, a mortgage loan, and a car loan, those are all going to appear, whether it's through the mobile or online app or in the front office for a rep for customer service. Maybe take a couple questions here. As we're going to move into now how BPM Online's platform can help to initiate this digital transformation. So question, is your platform integrated with social networks? And the answer is absolutely. So part of Omnichannel is integration with social networks. Also, so we can communicate through social networks. We can have customers, send Facebook messages or tweet in messages, and they can be identified by their handle as a customer and routed to the right representative, et cetera, and put into a case study. We're going to talk about some of that moving forward. But also we have the ability in the contact area of the product to enrich those contacts directly from social media. So reaching out to the social sites and grabbing any publicly accessible data to enrich a particular contact's information. Let's take another quick question. Can I work with BPM Online offline? Actually, this is more of a product question, and I'll probably would be answering it as we move forward. But so the reality is, yes, our mobile applications have the ability to work offline or disconnected, and then automatically synchronize when they come back into a network. So having grown up a salesperson, getting on planes and wanting to update my CRM and information on the plane, sometimes that was not the most efficient thing to do, because I would have had to, when I land, reconnect and make sure everything got across. With BPM Online, when you're out of the network, it just continues to work and save your changes and history, and then when it's reconnected, it automatically synchronizes. And so it's not a manual process by any means. So why don't we drill down into the product itself? Sorry. And let's talk about how the BPM Online platform can actually help either traditional banks or new banks deliver this omni-channel customer experience, customer journey. So first of all, BPM Online platform for financial services has 4 different components. The first one on the left is a marketing component. It's a full digital marketing platform, allows for digital market campaigning, whether it's email or social, but also market resource and loyalty resource management as well. So whether that is physical on-site seminars or direct mail distribution, or for loyalty, it's some sort of credit card distribution as well. All can be controlled from the marketing platform. The next is sales. This is actually our end-to-end, really corporate sales platform, and so it focuses on kind of a longer, process-driven corporate sale and customer acquisition. We'll drill down into that a little bit. Service and onboarding is a full functioning front office network, if you will, for retail. And so it covers everything from checking accounts to inquiries to payments and interfaces through surely omni-channel. So whether this is being used by a teller or a branch consultant, or it's being pushed to the internet solution or mobile, it can handle all those capabilities. And then finally, a lending-specific application that truly leverages our business process capabilities and offers out-of-the-box best practice lending processes from instrument selection or loan selection through the application process all the way to origination. So we're going to drill down a little bit first on the lending component. And the first thing is here that the product allows the customer to build their own unique product organization or catalog, if you will. And what this does is allows, whether it's the consultant, the rep in a branch, or serving up the most appropriate solutions on the internet banking, gives an easy access and easy to search and easy to find throughout all the different products. Likewise, you can configure those products with all the different parameters and set up particular probabilities of different profiles. So you see here it's talking about the age bandwidth, and the type of persona. And what this does allows the system to better predictively promote certain products to certain people based on their particular persona and behavior. The other thing that's the system's capable of and really helps in the origination process is you can build, the institution can build their own scoring model. So whatever data elements you want to use, whether it's age or geography or profession, to score a particular lending candidate, you can build that into the system and then promote those scores very easily into the, outward to the reps. It can automatically prioritize or rank particular candidates, or it can flag certain candidates, for potential deeper audit. So it can also combine, credit rating, income expectations, etc. The system also handles secured loans, so it can audit and maintain pledged assets. So you can store those directly in the system, and they'll be accessible. Could be to the customer if they wanted to look up what have I pledged to this particular loan. Obviously, if it's a car loan, that'd be pretty obvious. But if it was some other type of secured loan, they can view that, and possibly make transactions as far as exchanging assets to that. So handling secured loans as well. The system has a full contract, or I should say content and document management capability. And so handling the contracts from creation, modification, delivery, approval can all be done with the system and can be promoted out through all the different channels. So if somebody's on a mobile app and wants the 5-minute account opening based on what type of account they're looking for, the system can automatically generate and deliver an appropriate contract that can be executed online, if that makes sense, and then send that through a automated process for approval and close the deal. Throughout the products, all of the products, we have a very rich and deep dashboard and analytics capability. So regardless of what area you're in, whether it's lending, as we're looking at here, or sales, or customer service, dashboards can all be configured. Certainly they come with out-of-the-box dashboards, but can be configured very easily to show you what you want. Individual reps or employees can devise their own dashboards for their own purposes as well. A lot of times this is used in lending and sales for gamification, where you're showing a dashboard of their performance against their own KPIs, or maybe even the team, or who the leaders are within the group, etc. So that's the lending platform. Moving on to BPM Online servicing and onboarding, probably a little closer to what we've been talking about with respect to more retail banking and the digital experience. This part of the platform really is the backbone for that delivery, the omni-channel delivery of an end-to-end, one-stop shopping banking services. So everything to do with a particular retail customer is going to be contained, maintained, and accessible within this system. And so you see here the profile pop up. So let's say I'm an agent at a branch, or I'm at a call center. It's going to pop up the most pertinent information on that particular individual and allow me to drill down on any of those particular items. It can also, based on the parameters we set for particular instruments, offer what the best upsell, cross-sell might be. And again, omni-channel. So if this particular customer tweets me a message about, oh, I think I missed a payment, or, oh, I don't see my paycheck, that can get picked up and routed based, again, on their identification, their handle, to the right appropriate resource, and actually be responded to in the same channel if that's, appropriate, or, maybe it requires an attachment and we need to send an email, but we can switch back and forth between channels with no problem. The platform offers really a home page for consultancy or representatives, and so what you see on the left is a queue of the next, cases or instances or inquiries that this particular representative has to be working on. And so then they would just look at that, click on it, it would open up and drill down on the particular customer, customer and the problem, as well as allow them to communicate and execute pretty much all the tasks directly from this page. So one-stop call center capabilities, if you will. All of our products, as you might guess from our name, BPM Online, are founded in business process management. And so we leverage across the board the ability to automate processes, one, to keep them consistent, but also to streamline them and reduce the amount of manual work that has to get done. And so certainly within opening accounts, making transactions, and the loan origination process, there are underlying processes that drive those, which can certainly be modified very easily as well. Like I said, there's also case management, handled much like the incident management, being able to set different queue priorities and sorting and segmentation and delivering them to the right expertise to get them done quickly without a lot of handoffs and no paperwork. Behind the scenes, there's a knowledge base, a knowledge repository that allows you to store and then manage any type of object, whether it's just a document or it's a video or an audio clip, and then different processes can actually pick those up. So if a very common request comes in like, how do I reset my password? Maybe that's a simple little video that gets shot out to them without any intervention. And so tapping into the knowledge database, the knowledge base, can really cut down on the amount of work the actual rep has to do and supply the end user, the customer, with the best information quickly and easily. Again, like the lending, have the ability to build out all the products that are available in that retail environment. And so whether that's connected to directly to the mobile app where they click on, I want a loan, and it allows you to drill down on, is that a college loan? Is that an auto loan? Basically being able to build that structure and have all that information contained in the system gives access to that through all the different channels. It also obviously allows you to configure the different parameters for each of those different products. So one of the 4 or 5 initiatives that we talked about early was, innovative products. So you need a platform that allows you to not only dream up those products, but actually execute on them. And in this case, BPM Online allows you to configure pretty much anything you want. Again, analytics and dashboards, omnipresent, if you will, throughout the system, regardless of the area you're in. So in this case, we're talking about, the call center stats, number of quality calls, average call duration, etc. And so that moves us down to BPM Online bank sales. And so bank sales, as I mentioned previously, is really focused on commercial or corporate sales and has much more of a B2B flavor to it. And it starts off with really traditional opportunity management and I guess you'd say pipeline management for corporate sales, for the corporate sales process. It also allows you to organize and define entire corporate structures. And so you can visually, as you see here, design a holding company with its subsidiaries and its affiliates, but then also drill down directly into those particular objects and pull up all the information. So it really just gives a better visual organization to what can be very complex customers. Again, the business process underlies most functions in the product, and so there are pre-configured processes for corporate customer acquisition. Again, that corporate sales cycle. This brings up our contact database, and so specifically thinking of customer segmentation, and if I'm going to be promoting or a particular loan or credit card or investment, and I can set criteria for the age, the occupation, the region, whatever that might be, their past product acquisitions. I can set up a filter, a segmentation for that. And our contact database actually holds not only, customers, but prospects, but it can also hold employees, partners, subsidiaries, really any individual record that you want and any data element that you want, but then can be segmented based on those data elements. So they all coexist with separate segmentation and security across them. Likewise, you can do the same with the product segment matrix. And again, I think I pretty much already spoke to this, being able to build out all the parameters that define a particular product. I think we talked about scoring with respect to loan applications. A very similar capability that's available in customer weighting. And if you think back to the application of the concierge, where they can bring up a customer very quickly and identify all their information, they can also weight that customer. So this is a category customer, this is a Z category customer, all based on whatever parameters you want. Again, just the sheer dollar amount of their relationship, or the number of different touch points, or most recent activity, whatever it may happen to be. And once again, in this case, we're able to show the bank rep's efficiency, or really in sales world, it's more their pipeline and their opportunity management and their conversion rates. So finally, that brings us to the marketing component, and the marketing component really can be used across any of the other three. So you could use it to market loan offerings. You could use it to market to the retail, to mortgage lending, to corporate. It's really just a full marketing platform that, as I said previously, offers both digital campaign marketing, so email, social, that kind of thing, as well as physical on-site direct marketing as well, so marketing resource management. And then thirdly, allows you to leverage your customer information for loyalty type campaigns as well. It starts off obviously with the full contact database, as we spoke about before, allowing you to segment, slice, and dice and create the audience that you want. And I should say, seeing as the platform is omni-channel, based on that customer's preference, you can put the delivery method appropriately. There's a full lead management capability within the product, and so as leads come in from those campaigns, they get tracked. You can tell by channel, by source, where they came from. You can drill back, maybe they downloaded a white paper, or they visited a certain segment of the website, or they're connecting with a mobile app. All that information can get pushed forward to the sales rep, so they know immediately who they're talking to. Landing page management may seem like a small thing, but basically if you create these campaigns for somebody to click down into a point on your site, you need to be able to track that and capture all that information. This code here is not to scare you, it's actually to show that we create that automatically and allows you to literally cut and paste it to integrate with your website. So a lighter version, I guess, of our process management is evident in our marketing campaign management. And so this is truly drag and drop. Pretty much anybody can create a marketing campaign, again, whether it's for a mortgage lending seminar, or, download this white paper, give us a call, would you like advice on your car loan? Whatever it might be, you can build out a very simple or fairly complex process and then be able to track that all. Behind that, if you are doing a bulk email campaign, there's no need to have a third-party email campaign process platform, because it's all built into the marketing platform here. So we launch out, an email campaign, and the results start coming back, and we can see, how successful it was and how accurate our data is actually in our database. I mentioned earlier our content manager. We use it in a bunch of different places. We talked about it in contracts previously. In the marketing area, it's used for either collateral or setting up the body of an email. Fully, end user capable, no IT really needed for that. And as I said, we also manage physical events. So we merge the digital world with the physical world, if you will, and allow you to do, so if you're setting up an event, identify the venue, create the budget, identify the resources, the team that's going to work on it, and then really track the marketing return on investment for that particular event based on the leads that come out of it. Again, like I said, our marketing platform can also double as loyalty management. Actually, we're seeing more and more interest in the loyalty campaign programs, and actually as we build out more and more robust capabilities in that sense, we are looking at offering that as a separate product. So the marketing platform has that ability, but in some cases they're looking for a pure loyalty management capability, and we will have that. I don't know if I mentioned in the other areas, but across the entire platform we have an enterprise social network of its own, a chat function within the product, and so very kind of Facebook-like, whether you're referring to a particular client, a particular product, a region, whatever it might be. You can have all different threads, and you can have different people subscribe to those threads. And once again, of course, we have analytics that go along with the marketing, and being able to track all the statistics that go with that. Actually brings me to the end of the presentation. We do have another 5 minutes here or so, so I'll field a couple more questions, and thanks again for entering your questions. So what are the differences from a common CRM or ERP? What are the differences from a common CRM ERP? So I'm not really sure if you're suggesting what our differentiators are from the common CRM or ERP, or what are the differences between CRM and ERP. I would say maybe the easiest answer for us is what is our difference to the common CRM. We certainly don't look at ourselves as an ERP. ERPs tend to be more systems of record, not necessarily accounting, but accounts receivable, accounts payable, enterprise resource solutions as they're called. But our differences with a common CRM really relies in, again, back to our name, business process management. We are a process-driven CRM platform. Secondly, we combine marketing, sales, and service on a single platform. And I think thirdly would be, our look and feel, our engaging. Hopefully you saw that in some of the screenshots. We don't look like your dad's CRM, which tends to be table-based and looks like you're working in Excel. So we pride ourselves on being, having actually a social look and feel. Do you integrate your system with existing core banking platforms at the bank? I don't think you could work in financial services without integrating with the core banking system. And as I said in the beginning, while banks are looking at innovation within their core platforms, the reality is most of them have fairly legacy-based core platforms that hold a lot of critical information. And so yes, I would say pretty much in every financial services client, we are tightly integrated with the ERP. We can present and preserve as much of that data as people want, or we can message back and forth for just-in-time type data. We've done it a bunch of different ways, but no question, pretty much every customer, there's a need for that type of integration. Maybe one more question, as I think I have 2 minutes left. I could probably answer this one pretty quickly. Do we offer mobile banking? And I guess the answer is not particularly. We are not a mobile banking application in that we are not a transaction platform. We offer access to all your banking information and can poke through, accounts and balances and things like that. But generally, we would coexist with a true banking transaction engine that might already be there. And maybe this is the last one. Do all these innovations, like the best practices, pay off? How many customers really use them? I mean, I think that's a great question. And I don't know if I already said it in this presentation, but, in the early days of the internet, people weren't, it seemed to be taking off very slowly. And then as soon as it caught on, it took off and took over. And so e-commerce has taken over, the retail realm. As banking becomes more and more mobile and online, and it certainly has already, I don't know if jump the shark is the right phrase, but it's really certainly reached a critical mass. So these innovations, there's going to be some trials and misses, but, if I go back to Kaja, who's increased their percentage of sale, by almost 5% to digital channels, and if you partner that up with the cost savings of doing those, sales through a digital channel, you're going to look at certainly some success. So I think that's about all our time. Again, I really appreciate you guys joining us. I'm sure I didn't answer everybody's questions. We would love for you to reach out and contact us. Love to talk to you about your challenges and how we might be able to help you. And hope you have a great rest of your day. Thanks again.